What's up, everyone? Hello, money making addicts and wealth seekers. Welcome to a pivotal episode of Finance for Individuals and Business. Today, we're elevating your earnings. We're not just sharing knowledge, we're creating a nexus of financial empowerment exclusively for our group members. In this episode, we're privileged to host a very powerful and knowledgeable Frank Randall, a licensed financial advisor who creates financial stability for professionals. Frank is a beacon for those navigating financial planning, wealth management, and retirement planning. His expertise is not just in growing assets, but actually cultivating a financial ecosystem where professionals can actually thrive. First things first, a word from our sponsors. This is our new innovative group feature that not only showcases your business, but also intertwines your story with our collective narrative through live interviews and collaborative wisdom sharing. Our journey began with a vision to create a community on social media where aspirations for a prosperous future resonate in harmony. Our mission is to nurture growth and foster development. We invite you to join the rest of our pioneers and thinkers as we evolve, prosper, and sculpt a future with opportunities. Pivoting back to the present, I'm here with Frank Randall, licensed financial advisor. There are a lot of laws around finance, so I've created a quick disclaimer for this episode. The information provided in this podcast is for general information purposes only. All information on this podcast is provided in good faith. However, we make no representation or warranty of any kind express or implied regarding the accuracy, adequacy, validity, reliability, availability, or completeness of any information on this podcast. The views expressed by the podcast guests are those of their own and do not necessarily reflect the views of the podcast or its host. The podcast and its host are not responsible for any errors or omissions or for the results obtained from the use of this information. Financial investing involves risk and is not suitable for all investors. Before making any financial decisions, consult with a qualified professional who can provide personalized advice and guidance based on your individual situation. You should always consult with your own tax, legal, and accounting advisors before engaging in any transaction. Boom.
Nailed it.
All right, back to reality. So I've had the pleasure of knowing Frank for some time now. Together, we've navigated a lot of financial problems. I've seen a lot of his growth. He's seen a lot of my growth, and we've seen so much of our clients' growth because we partner up on a lot of different things. Frank's forte extends way beyond financial advice. It's a lot about forging partnerships that pave the golden path for businesses and networks alike. So without further ado, let's welcome Frank. How you doing, Frank?
What an intro. Amazing. I love that. It's crazy how long we've known each other, finally getting this live started, and we talked about it for a couple of years now. So it's crazy to see the growth of the group. Humble, privileged. It's really exciting.
Yeah, no, for sure. It's I remember whenever you first messaged me, I actually think I screenshotted that in the group recently.
Yeah.
And we were just talking. But yeah, no, it's definitely been a lot of growth. I don't know if we just hit 8,500 members or we're about to hit 8,500, but it's definitely growing. And we've talked about moving the group private and everything. Once we hit 10,000, had some feedback. So I think the group is going in the right direction.
Yeah.
But this is all about finance for individuals and businesses. That's just all aspects. There's just so many different things, and you can make a million different podcasts about so many different aspects of finance, not just for individuals, but for businesses as well. And I'm glad we finally were able to get you on so we can kind of get down to the nitty gritty, kind of how to take those steps for people. Because it's a pretty big thing. People just see money getting tossed around. People take pictures on social media, look successful, but probably not. That's just kind of the name of the game, and they're trying to figure out how to do it, what to do, and it's really hard to trust someone. I know we talked about the 4 rules. You want to go into detail there?
Yeah, I think one of the first things just to add to that is one of the things. Well, maybe a quick intro.
I'm sorry about that.
Yeah, no, you're good. Just so everyone knows. I mean, I think that was awesome. And one of the things that I can say is, as a financial advisor, been in the industry for probably maybe 4 and 6 years, depending on when I start counting. And I've seen a lot of things that work and don't work. And one of the things that time and time again, and you kind of hit on it and alluded to it, is that many people or businesses are typically financially disorganized, right? They have stuff all over the place, multiple different, maybe, W-2 paycheck, a side hustle. Maybe they have, multiple credit cards, different types of insurances, savings accounts, old retirement accounts, student loans. And it creates like this vibe of paralysis, and people sometimes don't know where to start. I think you're mentioning that. And so one of the first things to do from like a financial literacy standpoint is to get organized. And once people get financially organized, putting your world really into 4 key domains, which I think you alluded to, we'll talk about, then we can start to talk about the rules and the order of things. So I really look at financial planning. I'm a pretty analytical person. You can see I also really enjoy playing chess. So I think strategically, and I love thinking multiple moves ahead. And it's no different like from a financial plan with a client. So
I didn't know you play chess.
I do. Yeah. It's
This
my,
entire time, and we never talked about it?
well, we'll have to get a game afterwards
Yeah,
because
for sure.
it's the hobby.
Yeah, that's awesome. Yeah, no, it's a lot of it is on a case by case basis. It's hard to make blanket statements and give that to someone to take and run with, because you don't necessarily know all the details. Like even in the group, you see people ask questions, and sometimes it's really hard to answer it just because
Yeah.
it either goes one way or the other way, or there's 15 different ways to go, and you just don't know the details. But yeah, and usually those details are pretty personal, so you have to immediately go to a DM or something like that because it can't really be shared publicly.
Yeah. Yeah. There,
Um,
there are people that I call them, financial influencers. I'm not going to name any names who, maybe they're not licensed, but they're giving out advice and they have no clients, but they're giving out blanket advice to people because, there's an agenda that maybe they want to, sell a book or a course or something. And not saying that that's bad, but it really is personal. I mean, you can have two very similar types of clients, but if the goals are very different, we're going to have 2 different strategies. But what we do know is that most people are, financially disorganized, and we got to get, financially organized first. Then there are some, rules that we like to follow. So I think that's kind of the topic today. And like you mentioned, this can be a multi-part, series, but really that's kind of what I wanted to jump into today.
yeah, no, for sure. What are the first couple steps you would direct someone to kind of start being more organized?
Yeah.
It's kind of a loaded question, but
Yeah, no, it's good. No, I think, the first thing is really to take inventory of everything in your world. And it's not just, budgeting.
mhm,
It's really identifying your assets, your liabilities, your insurance in place, and your cash flow. Those are really the 4 main areas. And, for those that are listening earlier on, at the end of this, I'm going to give everyone a link to kind of get financially organized on their own, for free. So I have a tool that I can use to get yourself financially organized on a complimentary standpoint. But, the first step is to get organized. And the second step is to begin to measure what you have and identify the gaps. So maybe I'll take a minute or two and just kind of do a high level overview of these 4 steps. Then we can maybe jump into detail if something, sounds meaningful or not. But
yeah, no, for sure.
when we look at the 4 domains of someone's financial world, those would be protection, assets, liabilities, and cash flow. And most traditional financial planners or people are familiar with just assets and liabilities, a typical balance sheet. What do you own? Who do you owe? And the difference is your net worth. And that's fair and reasonable, but they're missing, I think, 2 really important parts. So we have our assets, we have our liabilities. You're missing the cash flow. The cash flow is the foundation of your financial world, right? Think of it like a house. Assets and liabilities is the walls and the stuff. Cash flow is the foundation. And then the roof of your financial house is your protection. Things like if you get sick or you're sued, we want to make sure we protect all the things in the house. So the first thing that we'll always look at for people is look at the protection, look at the risks, look at the things that could cause you to not be able to save at an optimal level. Look at the things like getting sick, disabled, losing your job, passing away too early, right? Those are things that we would want to look at. So, protection first. Because before we focus on strategies that will help you build wealth for tomorrow, it's really prudent to protect what might happen today. And it's not sexy or exciting or fun to talk about, but that's probably the first thing I would say. Look at your employee benefits to work, identify if there are any gaps, go work with a trusted, advisor to help close that. That's the first step. I don't know any comments or thoughts on that, but step one is protection. Protect everything in the house.
No, it's a really big piece. I'm trying to remember the exact quote, but there's a guy who said it's kind of a no-brainer to spend 10% to save the other 90. Um, whenever you're pretty much hedging what your cash flow is,
Yeah.
what your assets are, and even some of your liabilities, so they don't become bigger liabilities.
Yeah, and that's why we do the protection first. And then when we staying on the topic for a minute of protection, I believe that we should look at what we call full replacement, right? So we think about car insurance, for
Hmm.
example. I drive a 2020 Equinox, and if that car were to get totaled, I don't want a 2011 Cavalier. Right? I want my car fully replaced, right? People tend to understand that from a car standpoint. From a house standpoint, I want my home fully insured and protected, and I want to be made whole. But a lot of times when it comes to income, right, sometimes people tend to cut corners, and we think about questions like if I were to get sick and can't work for 2 or 3 years, I got to ask myself, how would the mortgage, utilities, and groceries get paid? What would happen? And so when we look at things like disability insurance through work, group coverage, individual coverage, we really want to replace our income. So, I'm 35 years old. I'm probably going to work for another 30 years minimally. I'll probably keep working because I love my job. But, these next 30 years, I'm going to generate a lot of income. Now, I don't get to keep it all. Taxes,
Right.
lifestyle, fund, retirement savings. But if I were to get sick and can't work for 3 or 4 years, it would drastically change my goals, my retirement outlook. And so, from a protection standpoint, it's protection first, full replacement, and really kind of have coverage forever. And the last thing I'll say on the protection is I typically would, as a takeaway for people listening, there's really 4 things to look at. The first is if you get sued. So those that own a house or those that are renting, look at things like umbrella coverage. Umbrella insurance is just a way to help protect you in the event of a lawsuit. If I'm driving down the road and I hit someone who's making $50,000 a year, he sues me for $1 million, my car insurance will cut him a check for $300K, but I have a $700,000 problem.
Hmm.
Now, if I have umbrella coverage, which is something tied to your homeowner's insurance, that will trigger and help protect my assets, right? So if you get sued, if you get sick, looking at group disability insurance, getting your own disability insurance that you can keep with you, because once you change jobs, you can't take it with you.
Right.
The last 2, wills and trusts. There's some really great resources that we point clients to get some wills done. Even simple things like taking your phone and going and recording all of your assets in your house and saving that to someplace in the cloud. Because if there's a fire, you have proof of what your assets were to show the insurance company, like small things like that.
That's a big one. Repeat that.
Yeah. So everyone, today, if you have valuables in your house, take your phone, go literally record all the valuables on your phone and save it to someplace in the cloud. Because if there ever is a claim or a robbery or God forbid, a burning down the house or whatnot, you can say, look, I own all of these. I want to be made whole. It's simple, right? But it's like that maybe 2 minute, depending how big your house is, exercise will save you thousands of dollars in the event of a loss.
Right.
And then the last one is, life insurances. Life insurance is really, it's a want. It's not a need. Not everybody needs it. But if you want it, it does make sense to get it when you're young and healthy. So those are really the 4 main things that we look at from a protection standpoint. So long answer, but you asked Ryan, what's the first thing people do? Protection.
Hmm.
Identify it, figure out the gaps, and start closing them.
Right. Um, with the gaps, do you see like a certain gap that is more prominent that needs to be filled more often than others?
Yeah, I think the two that I see. So when it comes to like umbrella coverage, I don't do car insurance or anything, but what I'm shocked at, the amount of clients that I meet who have car insurance and homeowners insurance, but they don't have umbrella coverage. It's usually like a $15 or $25 a month rider. Like, it's very inexpensive. I just don't understand why people aren't talking about it. So that's probably a big gap.
It's just called umbrella coverage.
Umbrella coverage, yeah. So if anyone has homeowners and car insurance bundled with the same company, you can call your agent right now and say, hey, do I have umbrella coverage? If not, why? And can I get it? It's super cheap, and it will protect you in the event of a lawsuit in that car example.
Yep.
And the other one is disability insurance, specifically long-term disability insurance, because a lot of states have short-term disability.
Yep.
If someone's out of work for 2 weeks, you're going to use your savings account and your emergency fund. But some stats, if you don't mind, I love stats.
Yeah, for sure.
83% of long-term disabilities last 2.5 to 3.5 years long. So the question for those listening is, if you were out of work for 2.5 to 3.5 years and you were only getting 40% of your income, how did I come up with that number? Most companies will pay a benefit to employees around 40 to 45% of your salary.
Mm-hmm.
How would the bills get paid? How would that affect your goals? And so I don't know if I can tease the money-making machine.
Go ahead.
This is the thought process we talked about. I would say, if you own a money printing machine that's in your garage every single day, it's printing money nonstop, and you had the opportunity to insure that money printing machine in the event it were to break down to get a new one, would you do it? I think most people would. They realize that money printing machine is helping them achieve their goals, helping them accomplish, the life that they want to live. And that money printing machine is you and your income and your ability to work. And so when I think about things like disability insurance, I think about a story of two people. Person A is making a salary of, call it $100,000 a year, and they have no disability insurance. Person B makes $99,500 a year and has all of their income covered. Which person would you want to be? I think most people would choose person B, but they sometimes have a challenge of, I don't want to spend $500 a year on a disability policy. We can protect your income. It's probably a good idea to do. So those are the two big gaps that we see, the umbrella and disability coverage from a business owner and like a W-2 employee standpoint.
Yeah. I know that I'm going to bug you more about the 4 rules, but since we're kind of on the business topic and kind of long-term protection, key man business insurance, that's definitely needed where the company is dependent on the owner operator. Essentially, key man business insurance is not just going to protect the individual and the company, but also protect the investors, the actual investment, the asset. And I've seen a case where key man business insurance was needed and used, and luckily we had it. It saved a lot. I don't really want to go into too much detail, but yeah, it really made a huge difference. Can you kind of go into detail on key man business insurance?
Yeah, I mean, key man or key person insurance is typically either typically life insurance type policy in the event of if someone were to be incapacitated or pass away. And typically the key people are usually like executives, founders, top salespeople, really anyone that would significantly impact the company's ability to operate, the company's ability to build revenue, to be profitable. That policy is usually owned, by the business. The business pays the premiums, and the company is really the beneficiary in case of an individual's death or disability. And one of the things to explain is, and we have a lot of business owners in this group. And so let's say you're a business owner and you have a partner, right? We'll use me and you as an example, Ryan. So let's say we go into business and I were to pass away, and my percentage of the business would by default go to my wife if I don't have any key man insurance or anything set up.
Yeah, or
Now, my
partnership
wife is
agreements.
amazing,
Yep.
but you probably don't want to go into business with her, right? So, if we as the business had some sort of, key man insurance buy-sell agreements in place, you would receive a check to essentially buy out my portion of the business, assuming you don't want to work with my wife. But that's a big thing that I think a lot of business owners, overlook. The purpose of it is really just to provide the company with financial resources to cover the cost of recruiting, training, replacement, compensating for lost profits, repaying debts. It's really important for small business owners. A lot of times, and I'm not a small business, lender or anything, but a lot of times when small business owners go get SBA lending, they require insurances, life insurances in place for the other partners. So that's like a 101 view of kind of how it works from a planning standpoint.
Yeah.
Really important though.
For sure. I'm actually, I've been talking to someone that helps with SBA business funding and all that stuff. She's going to be coming on here on this podcast. Little teaser for later, but
Cool.
but she's going to be coming on. I've talked to her a handful of times. Awesome individual. But yeah, so Keyman Business Insurance. How do you go about getting something like that? Besides, like, obviously the answer is reach out to you or something like that. But like, is it written? So it's written through the company?
Yeah. So depending on like the complexity of the company, you're going to want to have a couple key people like in your corner, right? So you're going to want to have, a financial advisor, someone that can do investments, someone that can do the life insurance policies. You're going to want to have potentially, how complicated it may be, estate attorneys and people to write the legal docs, right? So we think about things like a buy-sell agreement, for example. You're going to want to have an attorney usually write up the agreement, and then you're going to use life insurance, for example, as a way to fund the agreement. You also want to look at things like, what if one of the business owners gets arrested and their licenses can get at risk, right? You want to have provisions in that buy-sell agreement to give the other partner a discount when buying the opportunity, right? So if me and you are in business together and you lose your licenses because you get arrested, again, just kidding, you get arrested and you not lose your license and can't work, well, I'm kind of in trouble, right? So now I want to have the ability written in a buy-sell that gives me the ability to buy your shares at a discount because you did something that caused you to affect my part of the business. So you want to have a financial advisor in place, depending on complexity, CPAs, estate attorneys. At my firm, we do investment planning, we do life insurance funding for clients. We try to be a main point of contact for clients, and we'll refer out to other partners, and we'll be a seat at the table, for those clients. But the first step, going back 22 minutes ago, is get organized. Right? Figure out what you have, what you don't have, what are the concerns, goals, and risks, and then from there we can build a plan.
I actually have a random question. So, like, probably 15, 20 years ago, we were spoon-fed like you must work, you must always put your money in your 401k, you gotta work a blue collar or white collar job, kind of thing. And that was kind of the general census in order to make it, to live the American dream. Do you see it continuing to change whenever you're talking to people, like you're talking to more self-employed business owners, gig owners, stuff like that, or kind of what's that look like?
Yeah, I think a lot of my clients are in the medical space, either, medical, like W-2s, like PAs, nurse practitioners. And I also have a handful of business owners in the medical space, people that own medical practices in one form or another. And I think if we look back 30 years ago or so, even 30, 40 years ago or so, the landscape and the situation is absolutely different. And I think, and I don't mean this, disrespectfully, but I think the financial planning ideas that our parents' generation subscribed to do not work for our generation. This is just my opinion. I think that, in the past, they said just work hard, put everything in a retirement account. Okay, well, cost of living was very different. People could afford houses. The increase of wages over time is slowed down. So I always have conversations with clients, and I'm thinking about a conversation I had last night with a client. It's important to save for retirement, but at what risk, right? Like what do you want to give up during the next 20, 30 working years? Because if you put every dollar in a retirement account, the challenge is you can't really access it. There's a couple exceptions, sure, but it's not super liquid.
Right.
So, the reality is,
can you explain liquidity real quick?
yeah. So liquidity is the concept of having access to money quickly. So liquidity, some examples of places that are liquid would be bank accounts, savings accounts, high yield savings accounts, sometimes equity in a house-ish, sometimes life insurance policies, sometimes equity accounts, you can lend against them. An example that's not liquid, again, retirement accounts, pensions. I just bought a house today. There's going to be no money I can pull out of it tomorrow. It's going to take time.
Yeah, for sure.
So, we really want people to think about putting money in the right buckets. I kind of have this visual that I show clients. Maybe you do it next time. I kind of see liquidity in 4 categories. There's short-term, middle-term, long-term retirement. Then there's risky and not risky. And we really want to play bingo and get money in all different spots. Yep. Where too many people put money in a short-term bank account in just a long-term retirement account. And so that's what our parents, I think, generation subscribe to, where we need to fill in all those different buckets. But yeah, that's a long answer of what liquidity is. Building ample short-term capital for goals and concerns.
Yeah. A lot of people just hear the phrase liquid or I am liquid or something like that, and they don't really understand it. It was one of the where did I first hear it? Boiler Room, man, in 2000s. You ever seen the movie Boiler Room?
Yeah, I think that's isn't that when he yells Rico? He yells on someone.
Rico, whenever, or Recco, or something like that. Recco, yeah, whenever he gets a guy on the line to sell, and then Vin Diesel runs over and sells it. But that's kind of where I first heard it. But yeah, whenever it comes to really taking that step after protection, people want to know kind of like what are the best routes to generate more money passively. And it's a super, super loaded question. And it's hard to really pinpoint what would be a good strategy for a lot of different people, because not only does it depend on your income, a lot of it depends on your location, kind of what your resources are.
Yeah.
But taking that first step, getting protected, after protection, what would you suggest?
Yeah. So the second place, which is really becoming a world-class saver. This is where we want to save the right amount of money in the right buckets. I think it actually ties into a question that someone just had. So I'll kind of do a segue here. The question was, in the comments was, I heard about something called a backdoor 401k. Is that something that is smart for small business owners making 65 to 80K a year? So again, not necessarily talking about specific advice, but just, kind of high level. You may be thinking of a Roth backdoor conversion where we can contribute into. So let me back up. In a retirement account, we can put money that's either taxed today or taxed in retirement. The money that's taxed today are Roth accounts. And the idea is, we'll pay taxes today, the money will grow tax-free, and then we take money out later tax-free. The inverse are traditional retirement accounts. You take the tax deduction today, it grows tax-free, and then you pay tax on distribution. And so for small business owners, there's really there's a couple different types of retirement accounts to consider, and depending on if it's just you, there's what's called a solo 401k. A solo 401k is really just you as the business and an individual. It's really suited for like self-employed individuals with no other employees, like other than a spouse. There's pros and cons to all these, which maybe that's separate time, but high level, it provides contributions for you, the employee, and you, the business, can contribute like a match. Super quick, the last two, there's a SEP IRA. This is I think it stands for Simplified Employee Pension, I think is what it stands for. Those are really easy to use. The SEP IRAs, there's significantly lower costs and complications than a solo 401k. So it's kind of like an IRA if you think about it that way.
What's the main like experience difference? Like I know it's hard to like see the big difference unless it's like been like 10 years down the road or something like that. So what's going to be the most significant difference between that solo and the SEP?
For a small business owner, it's probably going to be just the complexity of setting it up. I mean, a solo 401k is a little more complicated, just from a regulation standpoint. The SEP IRA, you can go to a financial advisor and literally open up an account, and it's much straightforward. If you're gonna scale and have more employees down the road, the solo 401k might be the 401k route might be better. But a lot of times, as people grow in their business, they may start with the solo 401k, and then they may do a traditional, IRA later. They may do what's called a simple IRA. There's profit sharing plans. So, I mean, to the person who asked the question,
right,
for someone making 65 to 80k a year, probably a simple IRA would probably be the easiest. And every situation is unique. Happy to take something offline, but that's just, I wanted to make sure I hit that real quick.
Yeah, no, for sure. That was it's a pretty good question. It's like almost an in between. There's a handful of ways this person can go. Definitely need some more information there.
No. And that second step about liquidity real quick, you're welcome. The second step about liquidity real quick is saving the right amount, right? A lot of times, well, let me back up. You can pull this from the U.S. Government. I think it's the Census Bureau. I don't quote me on that, but I have a link I could show you in a second. But the average American over the past 20 years has saved about 4 to 6% of their income on an annual basis. That's average. Now, during COVID, that number spiked to 30%, not because COVID taught us how to save. We just couldn't spend our money, literally, right?
Right.
So the second step is being a world-class saver, and this is when we save 15 to 20% of our income. That's the goal. And now, or if we get to that point of saving 15 to 20%, then we want to make sure we're saving in the right places, the right buckets. That's that liquidity conversation.
Mm-hmm.
We want to have a high rate of return in our accounts with the lowest amount of risk possible. We want to put money in the right buckets from a tax standpoint. And we also want to go back to that concept of liquidity. I try to work with my clients. Let's get 9 to 12 months of expenses in buckets that are accessible. And it doesn't always just mean a savings account
or an emergency fund. Yeah.
And so I actually, we call it emergency fund, but we also call it an opportunity fund, because this may be a little funky, but emergency fund, I think, is what I was taught to grow up with, and it's almost like conditioning me for something bad. But right, like
right.
The business owners, like, think about it. If you want to have an opportunity fund to invest in a business or go start a business, you want to have money that's accessible. If it's all stuck in your old employer's 401k plan, you can't get it without penalties and taxes. So yeah, we call it have an opportunity fund that can help with emergencies, help with opportunities, travel, weddings, goals. So that's that second and kind of third step, saving the right amount and saving in the right places.
Right. Is there Man, I don't know if you'll be able to answer this, but is there a certain investment vehicle or investment vehicles that you could recommend to people over the next that you think will continue to do good in about 15 to 20 years?
I think most of them. I
Most
think
of
when we're
them?
looking at that timetable, I tell clients outside, if someone comes to me and says, "Hey, Frank, I have like a 3-year window, I need to do something," that's separate. But most of the time, I'm less concerned about where the market is a year from now. I'm more concerned where the market's going to be 15 years from now.
Right.
And generally speaking, the market is typically at all-time highs most of the time. Right? Markets tend to go up. So I usually would tell a client, don't worry about picking the right stocks or timing the right companies. Control what you can control, which is put resources towards protection, save the right amount, and then invest in the right places from a tax standpoint, from a risk standpoint.
Mm-hmm.
I'm a big believer in what's called asset allocation. And the idea is we want to have some money in stocks, some money in bonds, some money in big companies, some money in small companies, some money international, some money in foreign. And that just reduces your overall risk because you're not just exposed to one type of account.
Yeah.
One other practical tip to the group, if anyone works for a company or has like employee stock, one of the things that I see often is, let's say a company works for Tesla, right? So they work for Tesla, they got their 401k, there's a lot of Tesla in their 401k, they get a lot of employee stock in Tesla, and they think that they're investing, they're doing great, but all their money's in Tesla, right? Like a lot of times people fall into that like confirmation bias. Like I work for the company, I know everything's going great, and it's really dangerous. And so to answer your question, without a specific investment, stay true to asset allocation, get exposure to many different types of markets.
Right.
And over time, it usually always works out.
Yeah.
So
Yeah. No, it's just interesting to see how the landscape is completely changing. Like even investing is a completely different landscape. Like we didn't have Robinhood 5 or like 10 years ago, like where it's easy free trading. It, previously, it used to cost every time you wanted to make a trade.
oh
Now
yeah.
it doesn't. So it's just interesting. It's pretty much trades all day long by retail traders. Um,
Yeah, I remember like back in 2008, I had like an E-Trade account. And it was like $10 per commission or something, and I'm like,
yeah,
you know, uh, for stocks and options, it was expensive. But personally, I had a Robinhood. I stopped. For me, it was just I found, this is just my personal experience. I found that I thought that I knew what I was doing more than I had any idea, and to me it was just getting in the way of my business and practice, right? Like I had ideas of like, oh, let me be a trader or whatnot, and I was getting distracted from investing in myself, which is my business. And so I've actually I've gone full circle. I used to do it a lot for myself, and now I let other people, like professional asset managers, do it because I get emotional. I'll get in my own way, and the average investor misbehaves because
yeah.
they follow someone on the news or TikTok or MSNBC, and they
Kramer,
yeah, right.
sell, sell, sell.
Yeah, you said it, not me. Buy, buy, buy. Um,
um,
it's. I think a lot of times people fall into that trap of, am I making the right investment decisions?
right.
Honestly, in the big picture, 15, 20 years down the road, most of everything is going to go up. It's just, really more about the day-to-day, the savings, the risk, the lifestyle.
Discipline.
Yeah, most people chase rate of return. I deal with clients all the time, and we're getting into like conversations of, well, this can give me this percent, this can give me this percent. All of that is historical performance. That doesn't mean anything. That's just what it did in the past. So instead of worrying about what's the best rate of return you can get, I would encourage people to worry about your savings rate. How much money can you save and invest in a systematic basis? That's way more impactful than whatever rate of return you're going to get.
Yeah. Yeah. No, for sure. That's a big one.
Yeah.
Um, and you mentioned something a second ago. I gotta get a pen and paper next time. Um, but no, from an investment standpoint, it's definitely difficult, especially if you've never done it before. But investing in stocks, options, and all that stuff. Whenever I was 15, well, I was kind of got into stocks and stuff like that before I was 15, but what really put me over the edge was paper trading. Um, Paper trading was probably the biggest thing that taught me the most without spending my own money. Um, and paper trading, so essentially paper trading is fake money. It's almost like a little fantasy league you can create for yourself, like a football fantasy league or something. But you start out with, like, let's say you give yourself $10,000 or $100,000 or $1 million, and then you have this amount of money that you go and invest it in stocks or options, and then from there it mirrors the stock market, so you actually see how your bets would have performed. So it's a really good idea to figure out how things work. Um, it's pretty interesting, but that's
Yeah.
definitely how I started. We got one more
Yeah.
question.
Yeah, the paper trading real quick, you can, try different scenarios or whatnot. And for me, whenever I do any, paper trading or any actual trading, to me, it's like my casino money is how I budget it. Like, it's not part of my investment or retirement plan. It's like, okay, let me take 1% of my income and either go to the casino and play blackjack or go, do Robinhood. That's just how I personally do it, just
Yep.
because, to me, it's more fun than anything. But yeah, question is profit.com a good platform? Honestly, I've never heard of it. I pulled it up. It looks like a cool UI. I have no experience with that, but it looks like it's a trading platform. But
I didn't know I
from
could click these questions and show them on the screen.
oh yeah, I think I was tabbing back and forth.
That's
Um,
cool.
yeah, I mean, when it comes to Robinhood, profit.com, any of these kind of things, for every like 5 people that you hear made it big in the stock market, made money, there's 500 that lost everything. Right. So like, I think a lot of times we hear people on social media say, oh my God, this penny stock, this meme coin, this investment, that's great. But you're not hearing like 4 times the amount of people that got ripped on the back end and didn't do it. That's just what I found to be true. But
I see it on Reddit.
yeah, Wall Street bets. Yeah.
Oh man,
Yeah.
Wall Street Bets is just a bunch of crazy apes, man.
I remember on that Reddit subreddit when there was like good content years ago. Like it was like people trying to like, help each other and learn. And now it's just like the zoo. It's just crazy.
Yeah. No, they'll ask their take on something, and then they'll just get like the opposite information. Um, but yeah, that's definitely Reddit on Wall Street Bets. I'm surprised how fast that blew up, especially with like Bitcoin and everything kind of blowing up right now. What's your take on cryptocurrency? I think I don't like it for a lot of reasons, but that doesn't mean that I won't make money with it.
Yeah. I think I have 2 thoughts. I think one, I think there's 2 different type. I look at it in 2 different categories. I think there's the ones that, now I'm not an expert by all in this, but just from my amateur, reading and knowledge, I think there's, some of the technology has utility outside of just, making money off of it. And then another, those are the stable coins, right? And then the meme
Right.
coins are just, nonsense. But from like the stable coin stuff, I don't know if, I feel like Bitcoin doesn't know what it is in the sense of like, is it a currency? Is it a technology platform? Is it just an asset? Like
It's being treated like a stock.
yeah. And up recently, a lot of the major asset managers have now, they're starting to allow us as licensed financial advisors to get clients exposure to instruments that have Bitcoin inside of them. So I can't buy Bitcoin for a client, but there are now ETFs and funds that are purchasing Bitcoin. So it's getting more institutionalized. Whether that's good or bad, I have no idea.
Yeah, we'll find out.
Yeah, but I recreationally watch it. I've never bought it myself, but I'm interested to see how like the psychology of it when the ups and downs happen. But I don't know. I think we're in a really. I have two young kids. I have almost a 4-year-old and a 9-month-old, and I'm thinking like I'm typically optimistic, but there's a lot of like technology, AI, Bitcoin, all this stuff that's coming in the next 10, 15, 20 years. And it's scary, but also exciting. And it's going to also, I think, change how we look at money and
Yep.
financial planning. And um,
Do you think we'll eventually be getting rid of cash in the next 10 years?
I feel like there's always going to be like an underground element that, well, maybe not actually. I don't know.
Have you seen how they're kind of pushing towards digital currency and credit cards and stuff like that?
I think getting rid of cash is one thing, but like I never carry cash because I could just use Google Pay everywhere. So like I'm already digital, but I'm using the U.S. dollar and
Right,
cash. So
right.
it's almost like the same but different. Um, I don't know. I think there's always going to be a
A physical
purpose.
cash?
I think there's always going to be some purpose for it. Now, whether that cash is worth anything in 10 years, who the hell knows?
Yeah, that's probably it's probably a better thought process if it's worth something, the
Yeah,
American dollar. Um,
yeah, that's
but yeah, no, I mean, I think I think there's definitely some things on the horizon that are a little questionable to me. But that's just I'm gonna I'm not saying I'm gonna be that old grumpy guy in 20 years saying like this isn't how it used to be
get off
or
my porch.
yeah. I'm not gonna be doing any of that, but it's just like it's just crazy how fast it's moved. Like we're not old people.
Mm,
We relied on cash. We didn't get like iPods until we were like in the teens. We didn't
yeah,
get cell phones until late teens. Like,
yeah. You paid for texts and minutes, right? That's
yeah, yeah. Prepaid phone, flip phone,
yeah.
baby.
Yeah. I
Got
mean,
my first
it's
phone whenever I was 17.
yeah, it's crazy, and that's why like when I work with clients, I always say let's just control those four things. Protect your todays, save the right amount, save and invest in the right places. And then the fourth step is be debt free. Like if we can just stay true to those four, as the economy and technology and world changes, we'll be okay. So I think sometimes people get too in the weeds and they get analysis paralysis or whatever it's
Right.
called. So,
Th-
um, so
Speaking of analysis paralysis, I used to get it quite a bit. I did day trading for a little bit. Um, I just got tired of it. Um, but with day trading, it was interesting to see all the different tools,
mm,
measurements, and things that you can see within a company. Like FinViz, we talked about FinViz
oh,
kind
yeah,
of recently. You made a post on FinViz. It's a screener tool. Um, FINVIZ is the name of the platform, but you could see the screener tool and it lays out all the different kind of investment sectors of the stock market. And it's red if it's down for the day, green if it's up for the day. So you can immediately see just with one glance what sectors are doing good for the day and which aren't. Um, and that's always been interesting to me. And then
yeah.
using the screener in FinViz, you're able to see a lot more stuff, including um, people uh, that work with the company that are selling their own shares,
Mm-hmm.
um, or if you're trying to find just even statements, cash flow, cash flow ratios, um, running totals, running averages. There's so many different technical aspects. Even people trade off candlesticks. It
Yeah.
doesn't even have to be the technical analysis part. People trade on patterns all the time. That's a huge thing.
Yeah, I always like doing the patterns, and I think with FinViz, one thing that's interesting. I always when we do these, I always want to figure out how can I give some practical kind of advice. And one thing I'll tell people is that a lot of times I'll run into clients who may have a handful of different ETFs or mutual funds, and what they don't realize is those three mutual funds or ETFs that they own all own the same companies. Or like I ran into a situation where there was a client who thought he was diversified because he had 3 or 4 different funds, mutual funds or ETFs. And each one of them had this, if you look at the top 10 holdings for each one of them, they're all the same. So this one client has all the same like technology companies and he has no exposure to anything else, but he thought he was diversified. So like it's those kind of things that we see as professionals often to say, hey, like here's the gap. You can choose to change it or not, but did you know you think you're diversified, but you really own the same 20 companies, and maybe it wasn't what they were trying to accomplish. So we see that a lot, and that FinViz can represent that pretty well.
Yeah. No, FinViz is great. There's a lot of other tools and resources out there. YouTube was probably one of my biggest teachers, even when YouTube wasn't that big of a deal back in 2008, 2009. I remember watching a lot of stock videos, kind of being addicted to it, reading books. There was one of the biggest things that a couple people pushed was trade without emotion. You kind of touched on it earlier, but that was a really big piece, and that was a very, very hard lesson.
Yeah,
But
that's
knee-jerk reactions are the worst. Whenever you leave your strategy that you were using to make certain measurements to predict whatever you wanted, whatever test you were doing, if you change that strategy, it changes everything. And that's trading with emotion.
yeah, and I'm gonna not to plug myself, but to plug the financial planning industry.
Oh yeah, for sure.
A couple years ago, maybe 2 years ago, Vanguard came out with a study. Vanguard, the one that we all know and love, came out with a study, and they said if a client works with a financial advisor, they typically see portfolio returns 2 to 4% greater than if they didn't. And that's not because the financial advisor is picking different investments. That's because the financial advisor is coaching the clients to behave and not sell too soon or buy too high and make the right contribution decisions. And so a lot of times people look at financial planners or financial planning and say, oh, I can manage it myself. Of course you can. But when the days are red and life changes and you have a kid, you buy a house, you do something else, what are you doing? Are you making the right decision? So I always like that Vanguard study because the value really is less like you just said, anybody can pick stocks. We have so many tools today. So it's not about stock picking. It's about cash flow behavior. It's about financial behavior. It's about risk reduction. At least that's how I view kind of what I do in my profession from a planning standpoint.
Yeah, no, on a personal financial level, figuring out where you're spending your money the most is pretty big, especially with everything being subscription based. So many things are convenience fees. You're just doing it quick now. You get Uber Eats, that's convenience. That whole thing can be avoided. Just things like that. And it doesn't even have to be stuff you're spending on personally, it could be
Yeah.
stuff you're spending on for other people.
And a lot of times too with technology, everyone's all excited about technology, but here's the truth. A lot of like 401k companies or even Vanguard, Fidelity, whatnot, you can do what's called robo-advising, where you answer a couple questions and they'll spit out a portfolio. The problem is that a robo-advisor doesn't give a crap about you as a person or your situation or understand the full picture. It's just spitting out data. And I think a lot of people are falling, not victim, but they're falling into that trap of, okay, I did my due diligence. I'm going to kind of do it on my own. I got a nice portfolio, but it's sure you're making 11%, but you're losing 8 on the back end. So you're only making 3%. It's really, how do we look at that whole balance sheet? And one of the things that I know Ryan and I talked about, we'll make available to everyone, is that first step is to be organized, right? And so one of the tools that I use for clients is almost think of it like a financial like scorecard. It's a way to understand those 4 different domains and identify if there are any gaps. So, I know we're coming up close to the time, but I'll make it available to everyone. If you want to kind of see how you are from a financial balance standpoint, think of it almost like a financial MRI, like see how you're doing, if there's any concerns. I'll make that available. Again, there's no cost to that, just a complimentary assessment to see how you're doing, see if there's anything that's missing.
And it's human-less.
Human-less, yeah. You want to make sure you're not missing anything that matters. You don't have to input any personal, you don't have to share any information. It's really trying to make it a resource for everyone. Um, totally human-less, yeah. So I think that's just from an education standpoint why we started this group, right? It's be a
Yep.
resource, help people, and that's what we're
It'll
doing.
definitely help them get organized. I was playing with that platform earlier this week, Sunday actually. But yeah, that's awesome, man. You have a bunch of meetings and stuff today?
Oh, well, looking at my schedule here, actually no more client meetings. I got just 2 interviews. So at my firm, I'm the director of training and development, so I do a lot of interviews for the firm as well. And later tonight, I have my Rotary Club. I don't know if anyone's a Rotary member, but we have our Rotary Club is the average age is like 31, so we skew a lot younger, which isn't typical of normal Rotary groups. If you know anything about
Right,
Rotary,
right.
yeah. But yeah, I got my club meeting tonight, so I'm excited
How
to do
how
that.
long have you been with that Rotary Club?
Probably 3.5 years now. So I was a member for a while, and now I'm the director of fundraising. And we volunteer, engage with our community, and for the business owners in the room, you make your own income, you set your own schedule with some capacity. It's always
Right.
good to, I think, give back. So yeah,
Yeah,
no,
no,
it's
for
fun.
sure. I'm doing volunteering tomorrow.
I
Um,
know you do what was it, the MS walk, or you did something, I think, right? Pretty
yeah, no, I have partnerships with the MS Society, multiple
yeah,
sclerosis,
yeah.
and I've gotten group volunteer of the year, which
Whoa.
is pretty cool. That's pretty much you get that from being able to recruit enough people to go volunteer with you. I didn't expect it. I didn't
Hmm.
think it would happen. The second time I started expecting it, but the
Hmm.
first time I didn't think that many people would join. But turns out there was a pretty good turnout. And the events that I usually do for it's the bike MS. There's usually like 1,000+ riders, so
Wow.
we usually need a lot of help. And they ride 2 or 3 different races everywhere between like I think there's a 50-mile race, a 75-mile race, and a 150-mile race, or something really similar, something
Hmm.
close to that. And it depends. Sometimes the races change from year to year, kind of the destination, the route they're going to go. Um, but yeah, that's for the MS Society, multiple sclerosis. It's a hell of a disease, man.
Hmm.
Um, I've helped a handful of full of people in the health insurance industry, found out they had MS, and then kind of looked into it, found the MS Society information, and I reached out to a couple advisors, and I ended up reaching a director there. Um, and then that's kind of how I found the partnership. And then I ended up doing a lot of volunteer work with them. Um, and yeah, it's just been they're a great partner. And then obviously St. Jude,
Hmm.
St. Jude's a big one. And then I do some shelters and stuff, but it's not 24/7, 365 volunteering. I wish it could
Yeah.
be, but I don't make enough money to do that yet.
Yeah. Yeah.
But one day,
Same. Yeah. Yeah.
one day all I'll have to do is just help people.
Well, that's
Um,
that's almost a good goal. Is like to it's like to,
right.
to to be so wealthy, you just have to give it all away, right?
That's actually, so have you heard of the Giving Pledge?
Maybe I don't know. Not enough to stand on it. No.
Okay, so the Giving Pledge, it was originally created by Bill and Melinda Gates, I want to say.
Hmm.
But essentially they got all these billionaires and multi hundred millionaires to sign a giving pledge that whenever they pass, about a
Hmm.
very good amount of their wealth gets transferred to charities. Like
Cool.
99% of their wealth goes to charities.
Yeah.
Um, so, but yeah, Giving Pledge is pretty big. One of the probably one of the bigger people that died recently. Um, he owned part of the Seattle Seahawks.
I don't know if you can hear that. There's a train going by my
That's a
office right now.
passenger train.
It's crazy. I hate it.
The Paul, I'm trying to remember. He created Microsoft with Bill Gates.
Oh, yeah.
But he passed away, and he was part of the Giving Pledge. But yeah, if you look up the Giving Pledge, it's nothing but like billionaires and yeah, pretty much nothing but billionaires.
Paul Allen.
Yeah, Paul Allen, that's his name. Yeah,
Google. I didn't know that.
yeah. No, Paul Allen. But yeah, he owned part of the Seahawks, and yeah, he passed away. Same thing with there's another pretty famous rich guy that passed away, but he was part of the Giving Pledge.
So
Um,
it's the billionaires, the millionaires. They
yeah,
don't count people like me, the thousandaires.
yeah, they. I mean, you definitely could. You definitely could do something, but yeah, it's just much more feasible when your cash flow is in the billions.
Yeah, I mean, that's legacy planning is important. I
Right,
mean,
right,
but
for sure, man.
possible.
It was definitely great of you coming on here. I appreciate your time. Do you have any last tips or advice to give to someone who lives paycheck to paycheck to try and get to that next level?
Yeah, I think the first thing would be to reverse the order of like how you're living your life. And so what happens is people will get paid, their money goes into a bank account, they spend their expenses and bills, and then they try to save. I would encourage people to set up a separate bank account or savings account someplace. And even if it's $10 a week, make an automatic contribution to that savings account before it hits your life cycle and before you start spending it. And even, $10 a week will give you 520 more dollars you didn't have last year. And then slowly begin to kind of ramp that up. Because what happens is we consume. That's our society. And it's hard, in my experience, to save money when I have access to it and I can see it. So personally, I have a separate account not tied to my Chase Bank that X amount of money will go in on a paycheck basis. It doesn't have to be $1,000 a paycheck. It can be $5, $20, whatever it is, just something. And then what's going to happen is you're going to gradually adjust. You maybe will spend a little bit less. And that's a good way, I think, to automate some savings and level up.
It's a good answer. That's a good answer. In this same situation, is there a book or two you would recommend to that person?
On that, yeah, I mean, I get a lot of my content, not content, but that side entertainment on YouTube or whatnot.
Hmm.
So, a lot of the books that I'll read, one of the most recent one that I read was, it's not financial related, but it's mindset related. The Power of One More by Ed Milet. That was a great one that I just finished, talking about just, one more rep, one
Yeah,
more dollar to save, one more ask for a client. So I think a lot of it's mindset stuff too.
yeah,
Prioritizing what's important.
yeah, for sure. That can definitely affect your spending just as much as a financial book, just kind of putting things into perspective so
Yeah,
you can understand the short term and the long term.
yeah, yeah. Taking emotion out of it. That's why people love retirement accounts, because it just happens automatically. So
Right,
let's duplicate that on an individual level. Have it automatically take 5, 10, $20 out. You'll forget about it.
right.
So
That's
that's
awesome.
that's that's thought.
Well, we'll cut it. It's been a little over an hour. I definitely appreciate your time, but to those listening, watching, definitely reach out to Frank if you have any questions regarding finance, either individually or even as a business. It's always good to hear other perspective, especially when they're familiar with not just federal laws, but also state by state laws. It's always good to bounce things off of someone. Um, but yeah, besides that, it's good seeing you, Frank.
That's a wrap.
Yes,
Thanks,
sir.
Ryan.
I'll talk to you later, man.
Hey, buddy. Bye.
Bye.